let's see, Walt. Mr. Walt. Walt got away from me, but did pretty much exactly what the chart told me it was going to do. The reason why I could be so presumptuous to tell you that is because in this area, this is what I saw. I saw left shoulder, an inverted head, inverted right shoulder, neckline in here, and it broke the neckline, and I think that after 3 or 4 whipsaws in here, I managed to take some out of it, but for whatever other reasons, I let it go in here, and then, of course, it manages to go to its first target, which was $90, and then there's a second target up here, and it's close to 100. So Walt still looks good. It's one of these companies that makes the right kind of coal for the steel industry, and China has an appetite for the product that comes out of this company. So that was the fundamental impetus for buying it in the first place, apart from what the chart looked like, was, or the accumulation pattern, was because China, it's a China sort of sympathetic buy. Just like we discussed ACI. Also, this is what I wrote today, out of the way, also sort of an accumulation, not nearly as pretty a picture as Walt, but the fact that it held in reverse last Friday into today on an upgrade on China is a very good sign. So let's go over to FCX, which is also an interesting case, because not because it's necessarily China involved or China sympathetic, but there is a huge copper component here, and it has a spectacular pattern. So here's FCX. It has a huge up move into new high territory. And what does it do? This is the shape it takes on its sell-off. Now, you see something like that on top of, above prior highs, you just sort of look at this and say, wow. My next textbook, this is what I expect FCX to do, and I'm going to include it in my next textbook for a textbook series of higher highs, higher lows, pennants, flags, continuation patterns. You could put it in any of those sub-chapters. And so if I had to pick an objective, FCX, let's see, 74 to 60, $14, $15. Let's call it 10. 2/3 of that move would be reasonable out of this pennant. Now, this pennant started October 13th, so it's 2.5 weeks old or young, and it's just about, looks like it's just about ready to take off. So if I had to look at this chart and say, what is going to happen in the next few days that could get that to do that? Well, my sense is, I guess, that it would be the Fed announcement that there is not a disappointment about QE2, that the Fed came through with $500 billion, which would not be a disappointment, and this would take off. The other thing would be China. China going, the Shanghai Composite. Let me just go back there just to show you what I think is capable of happening there. So here, if you didn't know better, you would think this is the FCX chart. Right? Let's go back. Look at this, FCX. Right? Up move, pennant, boom. Up move, consolidation, up move, pennant, consolidation, whatever you want to call it. Next up move is this. Now, remember this trend line. So China, I think, could get above the April high, 31.80. let's see, where did it close? It closed at 30.54. So let's just say, for argument's sake, 31.80 divided by 30.54 is 4%. So let's say 31.80 is the optimal target. It's going to take that out. Maybe it goes to 3,200, right? So 4 or 5% is the optimal up move for the Shanghai. And if the industrial, mining, basic materials types of stocks comply, you have 96.24. What is it here? 96.24 times 1.045, 4.5%. That'll get you to 105 in a sympathetic move. Is that reasonable based on the proportions of these legs? Absolutely. So that's what I would be looking for. Now, if just the opposite happened, since I'm not the only person that probably thinks this is a bullish chart, I'm not sure there's anybody out there who would think it's a bearish chart or a chart that you'd want to short. But let's say, for argument's sake, that the opposite happens and that we walk in on Wednesday morning or Wednesday afternoon at 2:15 Eastern Time, the Fed tops out and it does this. So massive support, 90 to 88.5. If it gets through 88, 88.5, I think it's a problem. And I'd be worried that lots of people got trapped up here. So remember, this is a coil. It should be a bullish coil. It should resolve to the upside in a proportionate way, 103, 108, somewhere in there. And if it doesn't, I wouldn't be complacent about the failure, because when you have a move that started at 56 and went to 100 and it failed up here, there are going to be so many people trying to get out of this thing that the door jam isn't going to be big enough. So I would be pretty vigilant about keeping stops in and with your risk management.